their advocacy and their spreading what I used to call spreading the vibe ended up creating more awareness around the brand and did more for the brand than I would argue even the investment did. We raised 7 million through that ecosystem on top of the 3 that we had already raised. If you have 1,000 people or thousands of people that are investing in your project, you have to be ready to provide. There's always that investor that comes in with a larger check that ends up being like more of a nightmare.
Well, welcome to the podcast, Scott. Excited to have you on. You and I have talked quite a bit about equity crowdfunding, so I'm excited to kind of delve into that a little bit. How about real quick, right off the top, give me what is your name and what is the name of your company?
And thanks for having me, Joe. My name is Scott Hansen. I'm the founder of Maverick Brands, which is a consultancy and marketing company that helps brands raise capital through the digital landscape with Reg CFs, Reg D, and Reg A plus.
Awesome. So how many companies have you started, including this one?
I'm a glutton for punishment.
Yeah.
So in my professional career, I've started 6 companies.
Okay.
This company is lucky number 7.
Okay. So 7 companies. How many of those have failed?
Well, I mean, there's levels of
Define
failure and
failure.
levels
Yeah.
of success, right? But
Yeah.
we've had 4 positive exits
Okay. 4 positive exits.
of the 7 companies that
Okay.
we've started. When I say we, there's a team of people
Yeah.
that are always part of these journeys. I would never in my wildest imagination take full credit for any of the journeys that I've been on. There's always been people that have been along the way that have made a lot of things happen. So
Yeah. Okay. Cool. So prior to starting Maverick Brands, you raised money. You had a beer or alcohol company that you raised money for through equity crowdfunding, and you ended up selling it. How did equity crowdfunding help propel you to a position where you could sell the company?
it's a great question. So, before equity crowdfunding was even in existence, I had other companies that I had started and bootstrapped. Which, if you're able to bootstrap a company and bring it to a successful exit, I don't think there's any better way to do it, right?
Yeah.
Because equity is what's really worth the most is your equity in a project, in a company. Um, when we started, we had an alcohol company that we started, and in alcohol in particular, and you don't find this in every segment, but in the alcohol industry, there's just a really heavy lift in terms of the need for capital.
Mm,
So whether it's manufacturing, and supply chain, proclivities, marketing is a huge lift
mm,
in alcohol. So when we found ourselves scaling in year 3 of the brand, we discovered this ecosystem of equity crowdfunding where you could actually get your customers to become investors.
mm.
And that was really interesting to us because I had already raised almost $3 million in
Mm.
outside capital to
Yeah.
help grow the company. And those that $3 million represented, maybe about a dozen checks, right?
Okay.
And so those a dozen, those 12 people that
Yeah.
invested in the company, including a production partner, so an
Okay.
institutional investment, there was only so much that they could do to effectuate the awareness or to help the company grow beyond their dollars. Whereas when we discovered equity crowdfunding and we raised 7 million through that ecosystem on top of the three that we had already raised, that represented thousands of people that then were telling
Mm.
their friends and neighbors about the brand.
Hmm.
And it helped not only, their investment was great because it
Yeah.
helped us grow the company, but their advocacy and their spreading, what I used to call spreading the vibe,
Yeah.
about the brand, ended up being, compounding, and it ended up creating more awareness around the brand and did more for the brand than I would argue even the investment did.
Yeah. That's super interesting. So your investors almost become like super fans, super promoters, helping you get, not only do you get money, but you get like 1,000 PR agents who are out pushing the brand, buying it for people for Christmas, telling people about it, get it on social media. That's that becomes more, that becomes, even more powerful than the money they give you. You got these people that are super energized, excited about what you're doing. So how many? So you took that company, you guys exited, everyone made money. It's awesome. You throw a party. You probably took a couple months off, and then you start kind of getting the itch again. Why did you go back and start your agency that helps people raise on equity crowdfunding? What was about
So,
that? What was that pivotal moment that kind of brought you to that decision?
you know, um, I did, I had a period of reflection
Yeah.
after that journey. And just like anything else in life where kind of finish a book, and you're thinking about starting another book, right? Um, the impact that the crowd had to evangelize the brand in particular was something I felt important to educate other founders on. There's certain things that can make or break a brand.
Hmm.
And if you have customers that are out there advocating for your brand, beyond just buying the actual product, but evangelizing and telling others about it, um, I think that there will come a time where people will, inevitably have the opportunity to invest in brands, just like they do vote for politicians.
Yeah.
You have a set of beliefs, and a brand can strike those belief chords as well. And
Yeah.
you want to get behind something because the brand stands for something. The other day, I was in the grocery store, and that those may go away too. By the way, everyone's getting stuff delivered right to their home,
Yeah.
and the world is changing. But I was in the grocery store the other day, and there's a brand that a friend turned me on to,
Okay.
and it was on the shelf, and I saw it in the grocery store, and I'd never seen it in the grocery store before.
Okay.
I was buying it direct, to our home, and I noticed that it was on the shelf, and the bottles were pushed back, and it wasn't lined up right. And I took a minute because I'd been in this business where retail on the shelf, has impact. And I've been in that type of business
Yeah.
before. And I stopped and I fixed the bottles and I moved them up front, and I merchandised their
Yeah.
product on the shelf because to me as a consumer, it's important that they succeed. And this
Yeah.
is one area where, merchandising is important. And
Yeah.
so, no different than, investing in something where you want to see it succeed. That's a real life example of
Yeah.
something that a consumer has the ability to do, right?
Mm.
And I'm rooting for them, and I
Yeah.
hope that their products continue to be on the shelves where I shop.
Yeah.
And I was just doing my little part to make sure that that happens. And I feel like that with equity crowdfunding. If I'm investing my dollars in something, I hope that I get a return on my investment. But that's my vote, right? That's
Mhm.
my vote for what I believe in for that brand.
Yeah. So how many companies have you helped raise money?
So far, we're close to 50 companies in this ecosystem. This year, I think we'll pass probably 60
Okay.
that we've helped. We've toyed with the idea of like any other founder. I look at scale. Like, how can we scale this ecosystem and help more founders? But like anything else, when you scale something, you're also losing something. And what are we
Yeah.
losing when we scale in
Mm.
equity crowdfunding? And you know, to the extent that we can help brands raise capital and
Mhm.
build a community, I think we found our sweet spot, which is probably, between 20 and 30 that we can help in any particular 12
Okay.
month period.
All right.
But that also has changed in the sense that we've now that we've done this for 2 years, we've learned that there's some cycles,
Yeah.
right? And typically in crowdfunding, the cycle of actually having successful campaigns doesn't really start until March, like the end of Q1, and then runs through to the end of October. But as soon as kind of the holidays kick in,
Mhm.
because we're raising capital digitally, we found that the cycle trails off in the beginning of November
Mm.
and really goes dormant, and it's hard to raise capital in November, December, January,
Mm.
February, because typically in that time frame, because of the holidays, e-com is so prevalent in
Mm.
in the digital landscape, and
Yeah.
people are getting hit with ads, and people are spending money on
Mhm.
other things. And so we found there's definitely a cycle. You know, just doing this in the 24 months now that we've done it,
Mhm.
and dedicated ourselves to doing it, we've seen that cycle, evidenced by the fact that January and February of this year were were pretty slow in terms of conversations and people launching campaigns. We still had conversations, we still
Mhm.
launched some campaigns, but now getting into the Ides of March, we're in the middle of March,
Mm.
and the conversations and the campaigns we're launching, the frequency of that has grown
Mm.
exponentially over the last 19 days in March.
Yeah, that makes a ton of sense. So how much money have you helped people raise with those 60 campaigns?
It's probably north of 100 million is probably a fair estimate. I haven't done the actual dollars raised because some of it has been digital and
Yeah.
some of it has been in the real world, where
Yeah.
part of
Like a
what we
Reg
do
D.
is yeah, part of what we do is I don't subscribe to the notion that a Reg CF is a all or nothing. I
Yeah.
really believe that a Reg D, where we're providing an audience of accredited high net worth
Mhm.
individuals, family offices, potentially some institutional investment, those investors are what really validates a great campaign. Like I truly believe that those two together compound, those two being accredited institutional investment and then equity crowdfunding community investment, those
Yeah.
two working together are much more impactful than just one or the other mutually exclusive. It's like going back to my own story, raising 2 to $3 million from a dozen investors, where they give you their capital, and that capital is valuable because you're putting it to work on their behalf through the project, right? But marry that with thousands of investors that are advocating for your brand, whether they're investing 500, 5,000, or 50,000 on the community side. It's those two things, the institutional investor through a Reg D and the community investor coming through a Reg CF or Reg A plus. Those two working together are what I find to be more impactful for a
Yeah.
founder.
Yeah, absolutely. So 100 million, over 100 million, 60 or so companies. When you talk to groups, I know we've kind of talked about it. What are like, but just to kind of hammer these things for equity crowdfunding, what are the benefits for companies, but then what are the drawbacks? Because there has to be some, there's always going to be a benefit and then kind of like another side of that coin. And how do you explain that to people that are preparing to do that?
Yeah, it's a good question. I mean, with I think there's drawbacks to both ecosystems. I mean, on the Reg D side, I think you really need to do a lot of due diligence
Yeah.
on those bigger checks that are coming in. I even I myself was a founder as well as other founder stories. There's always that investor that comes in with a larger check that ends up being like more of a nightmare, that you wish you didn't take their money and put it to work versus having them, you would have rather not have them as an investor because they weren't necessarily qualified as much as you wanted them
Hmm.
to be as an investor. So they're meddling or they're getting involved, and they don't necessarily have the prowess or acumen in your particular segment that you're working in.
Yeah.
They just have money, and they become more of more of a problem than
Yeah.
than anything else. So I think on the Reg D side, I think it's really important to know your investor
Mm.
and know how they might react if the investment isn't necessarily going the way they want it,
Yeah.
or their timeline is not
Mm.
necessarily
Yeah.
what. So conversely, on the crowdfund side, there's some great benefits to the founder being able to get better deal terms
Mm.
because they're not necessarily dealing with an institutional
Yeah.
investor, they're dealing with retail capital. But what are the drawbacks of a crowd fund? I mean, I think that the drawbacks of a crowd fund are more uh, are more on the founder and how they communicate and work with the crowd and the community
Mm.
than on the actual
Uh,
retail
how
investor.
well
What I
can they
mean
leverage that group and
Right. What I mean by that is like there are in retail capital, and no different than on the institutional side, but on the retail capital, there's a ton of disclaimers, and there's a lot of disclosures that really protect the founder and the retail investor. So the strong fences create good neighbors, so to
mm.
speak, right? So I think there's less drawback in terms of liability because
Yeah.
the liability is also spread out
Yeah.
across all these retail investors, right?
Yeah.
But that said, you now have a community of
Mhm.
people that you have to communicate with.
Yeah.
So I think the one drawback could be, you know, if you're a founder that isn't capable of really harnessing the power of that community and growing that community long term and
Yeah.
really bringing them along for the journey, like you have to get ready for that. If you have 1,000 people or thousands of people that are investing in your project, you have to be ready to provide the transparency and the
Yeah.
communication and really bring them along for the journey long term. It's
Yeah.
not, hey, thousands of people, I now have your investment, and you're never going to hear from me again. So you have to
Yeah.
really commit as a
Mhm.
founder to that level of time and energy it's going to take to foster that community and bring them along for the ride.
Yeah, almost really engaging them and, getting them to feel a part of the brand, a part of what you're doing. Um,
That's right.
Almost, essentially getting 1,000 people to row in the same direction on a brand, which becomes incredibly impactful.
Well,
Um,
and you do find detractors out there too.
no, I'm sure. Yeah.
People invest their hard-earned money, and again, I think the best thing you can do as a founder, whether it's raising capital through Reg D institutional or raising capital through the community,
Yeah.
is make sure that legally, accounting,
Mhm.
marketing, all of the information that you can provide up front in
Yeah.
terms of disclosures and how you're going to proceed, that really is tantamount.
Yeah. That makes a ton of sense. That's really, yeah. I love that explanation of it. Because I mean, it is on the ultimate, it's on the founder, the owner of the company to get those people activated and feeling a part of what they're doing, not just, hey, thanks for your check, see you later. And there's a lot of easy ways you can do that. Monthly webinars, you have questions about the product. There's all these ways you can engage people and maybe even leverage them to create new products, refine and improve your current products. I mean, people have opinions and they love to share them.
Yeah,
Um,
I mean
yeah,
that you just nailed a couple that are really
yeah,
cool for a company, and I think
yeah,
you know um, I think some of these monolithic, huge companies that are massive, they lose that,
yeah,
and some of them are more just like utilities,
yeah,
like I'm going to get a phone, there's only so many places I can go buy a phone, right? um
yeah,
but I think that two-way conversation with your customer, who now is an investor,
yeah.
is really what defines building a community as opposed to just taking from it.
Yeah, yeah, that's amazing. So, what is what's the process of getting an equity crowdfunding campaign going? Like, what does it require from a company? What is a difference maker between a successful and an unsuccessful company?
So, the platforms where you raise capital are not all created equal. They
Hmm.
all have their own nuances and proclivities. So, picking the right platform is really
Hmm.
important depending on what the goals are.
Yeah,
If you have a goal of raising 75 million in community capital, there are platforms that are better suited for that than
yeah,
for maybe a smaller raise.
yeah,
Um, but from a legal perspective and accounting perspective, we work with our founders to help them find, or we really built an ecosystem
yeah,
that allows for the right people to sit on the same side of the table as a founder,
yeah,
to get that project, built and deployed.
Hmm.
Um, it can be as easy as building the campaign and launching it inside of 4 weeks, which we've done.
Hmm.
But depending on, everybody comes to the table and they have, their own housekeeping,
Yeah.
depending on the deal structure. What does the cap table look like? There's no real easy answer. They're all very, tailored to
Hmm.
the needs of the founder and the project. But typically, when a founder comes to us and wants to raise capital, whether it's 500,000 or 5 million or 50
Hmm.
million, we bring them through the same process. And that process can take anywhere from 4 to 10 weeks. And once we launch their campaign, the process of the pre-campaign that we
Hmm.
go through, which is very thoughtful, um, you know, typically will come through in the actual execution of the campaign
Okay.
and the success of the campaign.
Okay. Cool. No, that's very interesting. So, what is the hardest part about doing one of those campaigns? Like, what's the biggest hiccup that people run into?
I think that the expectation that
Yeah.
founders sometimes have that they're going to just flip a switch,
Yeah.
and do one of these campaigns. I mean, I think that um, we've had campaigns come to us that are like on life support,
Yeah.
where they've tried their best to launch a campaign, and it just wasn't thoughtfully planned out. And so, rather than lose the time and effort and the resources that went into a failed campaign, we get involved and fix it. We've had
Yeah.
those come to us. But typically, if a client comes to us and they have a greenfield and they haven't started, any of the work, those are the ones that we have better odds of success.
That makes sense. Cool. Very cool. So, what's the best piece of advice you've ever received about fundraising, whether Reg CF or Reg D?
I think there's so much noise out there in
Yeah.
terms of what's the right approach. I
Yeah.
think there's the old school mentality that raising money through a community round can hurt your brand or tarnish your
Hmm.
brand, and that's coming from the people that are writing the checks on the
Hmm.
institutional side, who don't
Yeah.
necessarily want to let Joe investor in on
Yeah.
these venture funds. But I think the best thing that you can do is get the right legal accounting and folks like us around a campaign early on.
Yeah.
And I think that the best advice is really, you know be really cognizant of deal structure,
Yeah.
and how you structure a deal, and how you thoughtfully value a deal. I think
Hmm.
those are the key things. Is
Okay.
really looking at how the deal structure is put together, whether it's debt or equity.
Yeah.
What are the deal triggers? Again, I mean, if you're really thoughtful about how you go and plan a deal, the execution of it will turn out better.
Okay. Cool. I love it. Make sure you plan out, get the right people around you, and execute at a high level.
That's right.
Awesome. Well, thank you, Scott. Thanks for your time. Thanks for jumping on it with us here real quick. I look forward to working with you on more campaigns and helping people grow.
Yeah, Joe, we enjoy working with your group. Um, at the end of the day, when these things are complete and over, and the campaigns are done, and the founder has a fresh stack of capital and an opportunity to grow their brand. that's what's gratifying, and it's
Yeah.
good to be on their team, and it's great to work with guys like you to help us help other founders do it.
Yeah, absolutely. It's amazing. Awesome. Scott, we'll have a good one. We'll talk to you later.
Thanks, man.